So let's describe that process for the average person who's listening to this that does not even understand that, because it is important and it's really visible in like the Litecoin one and the Bitcoin Cash one and the Ethereum one. Not so much in Bitcoin anymore. The premium's kind of gone down, but can you describe it in layman's terms, like what that strategy is that these institutional or accredited investors, like the rich people, are doing with the Grayscale product to make money through arbitraging the whole thing?
Sure. The best way I've heard described, for Grayscale's GBTC is that it's a side door ETF, and it really is one in the sense that if you're buying as a professional investor, if you're investing into the private placement, you buy, let's say, $100 worth of shares, and you get a price placed
Well,
on the.
they wouldn't be buying $100, right? They'd
No,
be buying like $1 million
well,
or something.
actually, you can little. I think it's their limits are like $25,000 or $50,000. So it's not an enormous
Okay.
amount, but you do have to be accredited investor, no question.
So accredited investor is like somebody that's a millionaire, basically, right? Or they're making like $200K a year or something like that?
Yeah, it's pretty high bar. You either have to have $1 million in assets, or you have to be making $200,000 or $300,000 a year per year for the last 3 years. It's significant, but the investment amount doesn't have to be $1 million. So let's say that you bought $100,000 worth of Grayscale Bitcoin Investment Trust shares. You get the NAV price, basically the price of Bitcoin on the next business day at 4 o'clock is whatever price you get. So you're not paying some kind of a huge premium. You're paying whatever the market is on that day. Originally, when you first invested in 2013, if you were an early investor, you got to pay, a Grayscale a 2.5% annual fee, and there was no easy mechanism for how you would possibly get out. There was no real redemption. They briefly had their own redemptions, but the SEC went ahead and dinged them for that and told them they couldn't do it anymore. So that was it. You were in, and then eventually they created a reverse shell merger, where basically Grayscale bought a company, reverse merger, and then went ahead and listed the trust shares as GBTC on the OTCQX markets, which is basically it's a variation of pink sheets, is what it is.
That was what, 2015, 16? Or
I think 2015 is when they first listed it. I have to go back and check. I'm not 100% sure.
so that was like a way for the people who invested Bitcoin into the trust, into the private placement?
Either Bitcoin or cash into the private placement bond
What's that called when you put the Bitcoin in, or
in kind.
in kind? So you can invest in kind or with dollars, and then you get the price of Bitcoin the next business day. Or if you invested Bitcoin directly, like gave them your private keys or sent them your UTXOs, you just got the price of Bitcoin the next day as well, like in fiat terms, or
There was going to be basically a NAV, which is basically a certain amount of Bitcoin per share, and you got whatever the price was for whatever Bitcoin was trading at the day. You got a certain number of shares that you had denominated. As a private investor, as an accredited investor, you were pretty well covered. And then it happened to be that, as it was listed on the OTCQX markets, and as more people were able to go ahead and buy it in their regular brokerage accounts, there were definitely some brokerages, like if you initially in 2015, if you went ahead and probably talked to, Citi Private Wealth or Goldman Sachs, they'd probably tell you, no, you couldn't buy this thing, because they don't like dealing with pink sheet type of stocks. But many brokerages allowed for it, and by now, if you're blocking it, I think you're going to lose clients. And it has been probably the case for several years now. If you told your high net worth clients that you can't buy this product, there's a lot of friction at that point.
GBTC is a closed end fund, they call it, right? So
It
there's
is.
only those private placements, what, every 6 months or something like that?
It's open except for when it's not, and it's only closed at times that are denominated by the SEC for Rule 144A, which is all about private placements, about when they're allowed to go ahead and sell, and all the rest of that. Without getting into details, it's open most of the time, except for when by rules and regulations it can't be. It has to be closed during certain financial reporting activity.
Okay, so if somebody came to them tomorrow with like $1 billion, right, like a family office or something like that, or the Abu Dhabi Sovereign Wealth Fund or something, and they're like, we want to put $1 billion into the private placement, the next private placement, would they just open up one for them, or do they have to wait until like a couple months? Or
It is an SEC reporting OTC traded stock. And so they definitely have rules and regulations about when they can go ahead and accept new investors. If it was open, Barry would happily take that $1 billion. And, honestly, at that point, those kind of money, Grayscale would work very closely with them to make sure they're not moving the markets and figure out a way to get them invested. No question. Probably take a week or two to go ahead and get $1 billion done.
I mean, and these are kind of real numbers we're talking about now, because they're up to like 20 billion under management in Bitcoin now, right?
Yes.
There's significant money coming in through this, money that's already in the stock market, trying to get exposure to the Bitcoin price from these institutional investors and high net worth people, there's millionaires and billionaires and stuff. I'm just trying to paint the picture for not just me, but people like me that don't kind of get everything you're saying, but kind of follow. So there's two things here. There's like the Galaxy private placement, which is like you can invest dollars or Bitcoin in kind into the private placement, which is not actually traded on the stock market. But then they created that second vehicle you talked about, which was like a pink sheet at the time, which was the GBTC vehicle. What is that? So is that like a linked one-to-one to the private placement? Or like how is that relationship with the GBTC and the private placement? How does that work?
They're actually one and the same. The difference is that if you're a private placement investor, your shares are restricted. So you hold the same shares as somebody as GBTC, but your shares are restricted for a 6-month seasoning period where you cannot sell them.
Yummy.
More yummy once they're seasoned, for sure. Once that those restrictions are removed, then yes, you can go ahead and sell them.
So it is the same thing. It's just like it's like a different class of shares that you can't sell for 6
It's
months.
even the exact same shares. It's just that they're restricted. You can't transfer or
Okay.
sell them. It's the same stock. It's just, as far as I know, once they're unrestricted, you can sell them on the public markets. And the problem is that there is that gap. There's that 6 month. Originally, it was a 12-month window. They became an SEC reporting company. Now it's a 6-month window. But at the end of the day, that 6-month gap is a long time. So that if
Mm-hmm.
you as a investor, you see that, hey, look, there's a 20% premium difference between the underlying NAV, the amount of Bitcoin that is held by the Grayscale Trust, and the price that GBTC is trading at, you can ARB this difference. The difference is you have to go ahead and buy the shares, wait 6 months, and then you can ARB it. With an ETF, you would have something called an authorized participant, and they would be able to do that every day, all day long. You can do it every second of the day if you want to. You instantly go ahead and create new shares by, let's say you would give Grayscale one, Bitcoin. They would instantly create you 1 Bitcoin's worth of shares. You would instantly go ahead and sell those in the market, and you would be able to go ahead and collapse this premium, or be able to go ahead and buy at discounts and be able to go ahead and make profits in that. And that arbitrage difference is what makes an ETF super functional and what makes them track the underlying. And that's the big reason why the SEC at this point should approve it. And I think that that's going to be the big pressure on them, is they're now allowing for retail to go ahead and to buy Bitcoin, at least exposure, but have to pay this enormous premium because they haven't chosen to approve the proper vehicles, which is an ETF, which will track the underlying.
That ETF, like if that billionaire comes in and says, I want to put $1 billion into the ETF, they don't have to wait any period of time. It's just like they buy the ETF, then the ETF company goes and buys Bitcoin, and now they have one-to-one backing theoretically because the market's supposed to be efficient. Say if the price of Bitcoin is 30,000, and then buying that Bitcoin makes the share value of the ETF shares be worth $31,000 worth of Bitcoin. Well, someone's going to like short that, right? To get it down to 30,000 so it stays one-to-one, as close to one-to-one paired with the price of Bitcoin and the NAV, which is the net asset value or the book value of the assets that they're holding. In Grayscale, it can go up as much as like a 10x higher than the actual NAV value, which happened with Ethereum earlier in the year. I remember we were talking about that, and I was just mind boggled by how huge the premium was for people. So they did it with Bitcoin, and there was a 20% premium or whatever, and there's that incentive for a fund or a wealthy person to just an accredited investor to put Bitcoin into the trust, wait that seasoning period, which was 12 months, but now 6, and then hope that by the time that seasoning period is done, the price is higher and the premium is still there, and you're actually made 20% just for nothing, just to sell your shares onto the market in your 401k or your Roth IRA or whatever. So it's even tax-free and tax-deferred. So that was a pretty cool strategy for accredited investors for a while. But then the Ethereum Trust launched, and it was like $80 or something like that was the trading price of the Grayscale GETH or whatever it's called, the pink sheet version or whatever, the
ETHE.
ETHE. But you could put ETH into the trust, and people just didn't realize it was actually only about $8 worth of Ethereum that was backing the net asset value. But the price of Ethereum at the time was like $100. So people actually, I think, got fooled into thinking that ETH was like a discount. I think they thought that they were getting like free Ethereum, but they're actually paying over like 10x for the for the Ethereum. I was kind of taken aback by that when I saw that. I'm like, why does Grayscale allow something like that to happen? Can't they step in and say like, well, they ended up doing a split, I think, right? Like it seems like the premium has come down, but like, what's it like now?
There's nothing Grayscale can do about it except for disclose. And they do have on their website, you can prominently go ahead and look at their NAV. You can look at the amount of ETH or Litecoin or Bitcoin that is held per share. And so any investor that wants to spend 3 minutes of due diligence could quickly figure out what they're actually getting. Some of them clearly probably don't. And some of them are also, they're aware of it and they just feel that, hey, look, the price appreciation for Bitcoin is so great, or Ethereum or whatnot, that it's worth it now. And I've been on the retail investor who has held GBTC in a brokerage account or in a 401k, and I've paid the premium. It's something where I was willing to pay a premium because I felt that Bitcoin would probably, way, way outperform that. And under, like let's call it a 20% premium, that feels reasonable. As long as you think that Bitcoin is likely to do a 50% in the next 12 to, 24 months, paying a 20% premium that might evaporate away seems reasonable. Paying a 900% premium on ETH, you're playing a greater fool theory, or you are the fool at that point.
I think they just didn't realize, most people didn't realize that we're buying the trust, not putting into the private placement, because they're realizing there's a huge arbitrage here. I can roll the dice, because honestly, it was a risk, because you have to wait that 6-month period, and in that time, something could change, regulations could change, the price could collapse, and you could actually be down on your bet. So there is some risk there. But I think the retail people and even whoever's buying that ETH didn't realize how crazy high of a premium it was. Do you know what it is now? Must be down to like 50% at least, like
Oh, it's
something
even less.
something more.
When I checked it
Okay.
yesterday, it was something like around 16, 17% for ETH.
So that's reasonable.
I mean, like, look, again, like this is not financial advice. You do your own diligence, but it's the type of thing where yeah, I would personally pay a 16, 17% premium if I felt that the price appreciation in the coming months was worth it.
Not a 600% premium.
You know,
600% is a little much.
look, hats off to the person who went ahead and saw it at a 500% premium and traded it all the way up to 1,000% premium. So good for them. But that's not me. That's too risky for me. So, I wouldn't have touched that.
Back to the point of like why an ETF is needed. I guess an ETF it's not really needed. If Bitcoiners have proven that the ETF wasn't needed, because all the ETF companies that got denied, it seems like what had happened when we were following it back in the day was like all the people that were just waiting for the ETF just decided to buy Bitcoin instead of going in through the ETF, or at least they tried to.
An ETF isn't required. If you go back to the 1990s, there were no ETFs, and finance functioned for hundreds of years prior to that. So clearly, you don't need them. But it's a matter of efficiency. If people want exposure to things like metals or Bitcoin or other assets, the composite of the S&P 500, without needing to go ahead and get into complicated futures or options trading, then an ETF makes sense. And so from an efficiency standpoint, you want to see one. It's the same thing as saying that, hey, look, technically you don't need Coinbase. Technically, we don't need any of these on ramps. Everybody can just go ahead and talk to each other and buy $100 worth of Bitcoin from their buddy who mined it. And hope. Yeah, you can do that. It's not very efficient. So an ETF just makes the friction go away. And yes, if we never got an ETF in the next 10 years, I think Bitcoin would do just fine. I do think that more retail investors would be harmed by paying the premium for these products like GBTC, or for paying premiums potentially for buying on some of the retail products like Square or Coinbase. But look, at least that's a market driven decision. They should be able to educate themselves, become aware of that, and decide what they want to do. An ETF just gives them another better option for getting exposure to their regular brokerage accounts.